Welcome back to another StockTwits Q&A session. I'm your host, Brittany Umar, joined by Scott Red Dog Redler. We're here answering your questions live, so keep them coming. We got a first one, Scott, for you from Nate, saying, looking at the last 4 weeks on the spiders, it's hard to pick a direction. So should we just wait and see where the market takes us, or do you have a different opinion?
I think at this point, it's opinions that are getting people in trouble because everyone's reading the headlines, everyone's seeing how bad it is in Europe, everyone's seeing all the second quarter earnings come in and they've been pretty light. Some stocks have been battered and bruised, some are actually responding well, but overall everyone thinks the market has to go down. But we've been following this ascending channel ever since the June 4th low. So if you take a quick look at the chart here, you will see that, we had two different macro patterns this year, okay, after we had that first quarter move, if you guys remember, this first quarter move that started right here, when we came into January, there was a nice little pivot here, there was a nice little wedge type formation, and from there, we had a nice low volatility rally all the way to the top. Then you had the head and shoulders pattern top, gave you a measured move, coming into the second quarter, and then since then, with all the negative headlines, we've been maneuvering this new ascending channel. So here's the low, and we've been going from the low end to the high end, the low end to the high end, the low end. And then recently, we couldn't make it back to the high end of this channel. So that gave some clues that maybe this time will be different. And, we came back down in the past 2 days before today, we were hovering below this intermediate trend line. And guys like me, came in and said and thought, what? At this particular point, we could be breaking to the downside. IBD, which we follow pretty close, put us back in a market correction on this day after these distribution days, and we were hovering below. So I think a lot of guys got caught short today. A lot of guys thought that we would be heading lower. So tactically, what I did, if you come back to me, I went along the Spider 134 puts. Because whenever you have like a news-driven market, anything can happen. You can get squeezed, like we saw like today. The president of the ECB came out, Draghi, saying we're going to do whatever it takes to ensure that the Eurozone stays together. So when you have a heavily shorted market and you have a thin summer market, it can be very dangerous. So my thesis was a little bearish as we broke underneath that trend line. So I'm like, you know what? My risk will be premium paid. I didn't have actually any longs at all. And so I didn't deserve to make any money in the gap open. But that doesn't mean that you can't intraday trade, because there were stocks that gapped up that were weak the prior day that went negative. You had Priceline go negative. You had Amazon go negative. Apple was up, went negative. So there were tactical trades to do without having to figure out the market correction, direction. So from here, if you go back to the chart, you have to see, or respect this channel because we're right back into it. We filled this gap, and I think we're going to get a lot of the same. So as far as, a big bearish move to the downside, looking at this chart, you can't say constructively, or you have no data to say we're going to just head lower. And at this point, it seems like the path of least resistance could take us back a little bit higher, considering we closed near the highs of the day.
Well, so then the perfect actual follow-up question then, if you're not seeing that bearish behavior, is from Investry asking, at what level would you take a short on the spiders?
Well, I think everyone, that's all they want to do is take a short on the spiders. And even coming in today, you could have made a little bit of money tactically if you shorted the spiders. We filled the gap, and the spiders pulled in 60 cents, but there was no momentum follow through. If you go back to this chart, you will see, you go back to your 3-minute chart tactically, we opened up, right, after the big news, huge gap up, and went sideways for a while, no traction. This wide range bar right there gave you some clues that we could fill a portion of the gap. Short some spiders, if you were naked them and you didn't own them, or if you were short them and you were looking to cost average into more of them, it gave you a small way out, not a big way out. If you look here on the low of this move on this spot, it was like what, 135.32 coming into this area. So there was a tactical short. But then if you look here at this downtrend, that from the open, that was a spot to say, okay, I might have to get out of the way. If you didn't get out there, once it recrossed above here, you knew that the gap held. And typically, if you can't close this gap, you stay in the direction of that gap, and then it wound up closing near the highs of the day. So you go back to your daily chart, and at this particular point, I don't think you need to be in a rush to buy them, but you have room to the upper end of the range. So I don't think you need to be in a rush to short them. But what I would say is, if you're holding multiple positions, if you have 6, 7, 8, 9, whatever the amount of positions, I would have a spider hedge just in case you get some other news from Merkel saying they're not going to do whatever Greece wants, they're not giving them the do-over, or they're going to be stringent on the rules, or you saw yields start to spike. So have a hedge on with your long. So if you open down, you can cover your hedge, and you could add to stocks if they're actually acting well. And some stocks are acting well. It's just the problem is I don't see any leadership. So when I don't see leadership, I just take a little bit of a step back, and I just try and do a little bit less, and I keep my size down.
Market Picker asks, when you have so many earnings, how do you narrow your attention to only the in-play names?
Well, everyone kind of knows the in-play names. Like I know coming into the close today, everyone was focused on what is Amazon going to do, what is Facebook going to do. Those were some of the big earnings, in my opinion, besides Coinstar and a few of the other ones. And Amazon came out, and I think it was down like $15 after hours, and then it held support. So going into earnings after hours, you still have to be prepared. You still have to know where support is, where major support is, where resistance is. Amazon came out, and just from just thinking about it, I know that it traded down to about 202, which was right below this major support. So I think guys are probably watching this level right here, which was a little bit higher, around 205. And now it's it's actually confusing me, considering that they missed and they guided lower, and they made like almost no money, and it's at like a PE of 190. But I guess Amazon fans and institutions, they have it they have it all locked up. So there's still some shorts in there. So you need to know what the earnings are, so you know how to react after hours. And listen, after hours is a dangerous game. It's very thin, it's very whippy. You have to really know what you're doing. It's not for an individual at home who's just been trading for a year. Same thing happened with Facebook. Everyone knows, or we talked about Facebook a month ago on the Jim Cramer show, saying it was putting in a pattern going into earnings, which before it broke down, where you had two different plays. If you look at Facebook, where this was going into that strategy, it was right here. Okay, this was when you had the rounding bottom. It looked like a quick little cup and handle type pattern. You had your Red Dog reversal, which was a nice buy. You had this, which was a nice buy. Came back up, was building a nice little consolidation. So the play was, if you wanted to be long Facebook in front of the numbers, which is very, very dangerous, okay, you could be long small. But if it broke below 30 and a quarter, and we try and keep everyone involved so they know what we're doing, so we're accountable for it, you can get stopped out. No big deal. You can lose a little bit of money. Lose a little bit of money trying it. And then obviously as you come into earnings, I would say 99% of the time as an intermediate trader, we do not take stock into earnings because anything could happen. So fast forward a little bit, go back to the chart of Facebook, you will see that this is where right here, I got stopped out of Facebook. A lot of guys actually made money short it because it started to weaken about a day after that segment. But anyway, this was your out, this was your stop. Why was it the stop? Because this was the low, 30.50. I think I gave it to 30 and a quarter. And that was the push lower. And then all of a sudden, started going sideways. Looked like death after the Zynga numbers. You saw what they did. So after hours today, it was somewhat the wild, wild west. So this is what my traders are probably thinking about today if you come back to me. The low on Facebook was about 25.50. So obviously if you make a new low, a historic low, there's no memories. It can go anywhere. So numbers came out. I actually bought a little bit quickly around 27.50 because I saw the headline numbers. They looked like they beat a little bit and everyone was expecting a tragedy there. And it went up to about 28.50, sold some, traded some, and then once it recrossed back below my price of 27.10, I was like, whoa, this isn't really strong. Let me get out of the way. I nickel and dimed it, but I was not getting big because that's not what I do. I'm a bit risk averse. But then you had guys like Mark Sperling, a few guys on the floor, Lou. These guys were saying that it's pressured, it's getting weaker. If this stock breaks, the 25.50 area, it's really going to get pushed to the, or kicked to the curb. So if you go back to the chart, here you go. This was your new point of reference, even if it is after hours. Once it breaks this number here, and my little Quotron doesn't show me exactly what it was, but my memory tells me it was like 25.50. That was your area, or that was their clue to pressure it, because obviously there's nothing to the left here, and that's how you make momentum. So guys that are seasoned, like a lot of the associated members of our CBSX, or who've taken our active trading course or a momentum trading course, they know when you break levels, you go after it and you press, because that means it can go anywhere, and then you use your tier system to cover along the way. So right now I think Facebook is trading below that level, and that's why A, you don't take stock into earnings if you're not planning to hold it for a long term, because anything could happen. You saw that with CMG. You've seen that with so many of these things, even with Apple. Guys who've been holding Apple for 3 years, like, oh my goodness, it's down 35 points. You know what? Because that can happen on earnings, so you have some kind of hedge. So I guess to wrap up the question is, the fastest moving stocks that are the ones that are most actively played are the ones that I focus on each day going into earnings. Today, I think guys were just really concentrating on Amazon and Facebook because they're the ones who had the movement after hours. And I think guys in my office were pretty rewarded for, shorting Facebook once it rallied and the pressure came in and it broke those lows. But I'm in here talking to you, so I'll have to check that out after.
Well, you did mention Apple in there. So let's pull up that chart, because Stock Alert says he thinks Apple and the spiders have similar patterns. So what do you see when you look at it?
All right. Usually they do, and it's a better market when Apple actually leads the spiders or tech leads the SPX. At this point, the futures were up, spiders were up a decent percentage today, and Apple was flat. So it actually lagged the indices today. So usually that's not a great sign for Apple. So if you look here at Apple itself, you will see that this was probably one of the first few times I tweeted about it, we talked about it. I was not comfortable taking any kind of calls or a bullish bias into Apple, and that actually wound up working out, saved some money there. Now it's holding big support. You have a really big gap in front of it that's controlling it. So the longer it stays below this 580, the longer it goes sideways and shows relative weakness like we saw it today, right? You look at the spiders, you say they're usually together. Well, spiders had a nice big up day. I think it was up almost 1.8% or something like that, just off the cuff. And Apple, if you look here, you take a closer look, it lagged and was not in play whatsoever. So it's either just consolidating this down move, before it potentially tries to fill this gap, or the longer it stays below this, while the market rallies, if the market turns lower, this will be prone to break below this 570 area, and then you got to take a look at this this area below. I think this is right around 555, and then this area all the way down to like 528. So right now it seems out of play. I know myself, I was a little frustrated because the last 2 days I tried to actually short the lows here and it didn't break down. So I lost a little bit of money there. I think this needs to stay on your radar. Maybe it goes sideways a little bit longer. Either you're going to get a nice little trade to fill the gap, or you're going to get a nice trade, that for it to go low. And I think the key words or the key buzzwords here, which I mentioned, I think right after earnings, is now people want to know, when is iPhone 5 coming out? Is it going to be in September or October? If it's October, Apple could have another mediocre quarter, and it should definitely see lower prices. If you hear news that it's confirmed that it's going to be in September, chances are you might get a nice little rally because that pent-up momentum can come back for the new products, and it could trade through that that 580. So October bad, September good. Those are the buzzword headlines, and you have your levels.
I like how you break that down there. Now, 767 Driver has more of a general question. Wants to know, how do you identify sector rotation? Sectors out, sectors in, time frame, etc.
Well, the way you do that is you look at the price action, and the rotation has happened over the course of this year. Because if you remember, in the first quarter, tech led the way, retail led the way, home builders led the way, and then we corrected. And then off the lows, you've had a nice spirited move. First, the ags had a big move, so it was a great way to time it. Jill was all over the ags, and she said it would be a third quarter move, and meanwhile, it wound up being a third quarter move. You look at MOO coming into this third quarter, it didn't really work out well while the action was in some of the other areas, but once it put this bottom in, it's made a nice move off the low, nice percentage, and a lot of the leaders, CF, Monsanto, those guys did well. Recently, we talked about, could the OIHs do it? And the OIH is off the low. If you look here, a way to time it, here's that small red dog reversal. Okay, this is when it traded through, came back above. And then if you miss this, what you want to do is see commitment. And usually stocks have gaps, and if they don't fill the gaps, you get upside momentum. This was an ETF, so that means the OIH is gapped up, couldn't press lower, so shorts are trapped. So that showed you that you could have continuation. So it did when it traded above this area, and now look at this at new highs. So the problem with the market is right now laggard groups like this are leading the tape, so you don't find breakout groups like we did back in quarter one, but it's just a different tape. So all in all, you want to measure commitment, and here is your bottom in the OIHs. Here the gap up, little resistance, went sideways above this area, so it showed commitment to the gap up, and then it continued. And a lot of the stocks in that group did the same thing. You know, Schlumberger, here is your bottom in Schlumberger, closed at highs of the last, 6 weeks. I know Halliburton was a piece of junk for a while, and then boom, it changed character, right? Right here is when, you know, you had your reversal off the lows. Right here, I think this was from Morning Call. We talked about the downtrend being broken, closed strong. So it shows you how you could tactically pick, you know, laggard groups off lows if you measure the commitment to them as they hold higher and make higher lows. As an investor, you always want to be in the leading group because you don't want to have to, you know, make back all that ground. But as active intermediate traders, you could find that new sector, and the sectors have been rotating.
All right, we're going to take a quick break. We'll be back with 2 different points of views in just a minute. Keep the questions coming, guys. We'll be right back.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
We're back answering your questions live. We are joined now by Evan Lazarus and Mike Lee for a couple different points of views. Let's start with one for Mike, Dieter Trader, asking, Mike, where did you learn to be a momentum trader as you are? Do you use charts or is it all level 2?
Okay, it's a great question. I started about 12 years ago, and I concentrated definitely on the level 2 in the beginning, but I taught myself charts. Over the years, I taught myself the patterns that were consistent for me. Bull flags, bear flags, wedges. So I implement the level 2 as my protection, but the chart as my confirmation.
Well, maybe you can both ask this one coming from Big Ponzi. What is your favorite trade setup?
I think I had this question last week. I'll talk about this question. I think there's different types of setups, different types of strategies. There's different approaches. For me, I know that I prefer to trade stocks on the short side. It's just a comfort thing. And I prefer to trade gap ups that fade with declining averages on analytical timeframes. I know that that's a hard thing to explain. If you take a look at Apple today, as a good visual reference of what we're talking about, this is my type of trade. Here's an hourly chart, declining averages. The stock gaps up into an 8 and starts to sell off. As a short-term trade, that's the kind of thing that I have, a very high success rate with. For Mike, it's probably not too different, but he probably explains it just a little differently.
Yeah, I can't tell you I have a favorite trade. It's part of what type of market I'm in. If I'm in earnings season, I definitely use the first 5-minute high and low as a very aggressive trade that works for me a lot. If it's a slower time throughout the year and the market isn't letting me have that quick first 5-minute trade, then I'm looking for more consolidation. Bear flags, bull flags, channels for that afternoon momentum trade.
Now, Don Francisco asks, how do you know when to get out of a trade momentum trade?
Okay, always, every time I get into a trade, and this is what I teach in my momentum class, you always have an entry, a target, and an exit. Okay, so let's use a 5-minute opening bar trade. I take that opening range. Let's say we have a 50-cent opening range, and the stock goes through highs in the first 5 minutes of the day. So what I will do is protect myself with a 50% retracement of that first 5-minute bar. So in that case, it would be a 25-cent stop. My target is 25 cents on the upside. The reason why I have been consistent throughout my career is that I'm always booking profits. So if I get 1,000 shares, I'm taking off 500 immediately when I'm in the money. So that gives me the protection of the downside. I like to say I'm playing with that trade's money, not the house's money, but the trade, and I work it from there.
Now, how does your momentum trading style, Mike, differ from what Laz teaches in the Active Trader course?
Okay, my class is more on a shorter time frame, 2, 3, 15-minute bars. Evan likes to extend the time frames a little bit. I'm looking for more of that momentum, 2 to 5 minute trade. A lot of my money that I make is consistently in the morning. So for those of you who love the trade from 9:30 to 11:30, that's my specialty. I am making my money early in the day. I'm using 2-day charts. I'm using highs and lows early in the day to execute.
Now, Don asks, Mike, tell him a little bit more about the first 5-minute high-low bar that you and Steve talk about.
Show them an example. You have an example of today?
We'll use LVS today. All right, so LVS is a perfect example. Why am I looking at LVS? It gapped down, it had earnings. Two catalysts that, for a momentum trader is ideal. I'm looking for a catalyst. Earnings, 52-week high, 52-week low, if there's biotech news, etc. So now I have my opening range in LVS is, I think it was,
the low.
The low of that candle is
down here around 35.70.
35.70, and the upper end of that range
36.5.
All right, 36.5. So there's two types of trades, okay? High and low. So as I enter the trade, if it goes through the high of the day, okay, and doesn't work, that's not a failure. It's okay to lose on trades with your honest stop, okay? Your first stop is the cheapest. That's what I always say. If I'm wrong, I admit it. I don't care about being wrong. Okay, I'm taking little losses. As LVS breaks that first low of the day, that's where I get my momentum trade. So as I lose a little on the upside, I gain a lot on the downside.
All right, Laz, how about one for you? Shady Capital, for day trades, do you look for stocks moving the same direction as the overall market, or do you look for counter trend trades as well?
Well, look, I think in a perfect world, it's easy to look at the market and say the market's going up, I want to be long. Different market environments, different conditions call for different types of trades. Currently, if we're just looking at what's going on today or in the near term, it's not that trade. Everything is unto itself. You're seeing stocks, especially earnings trades, get beaten down, taking massive haircuts or gapping up. Some trades are just completely unto themselves. Right now, we're in a market where you have to respect what the stock you're trading or your specific trade is telling you about that trade. You can't look at everything as A equals B equals C. So, if the market's going up, that doesn't mean you should just be long if your stock is saying, hey, I'm breaking down, I'm making lower highs and lower lows. So you have to respect what your, individual, the market, we were just talking about LVS, Mike was talking about LVS. Look at that chart of LVS. We'll go back to that chart for a quick sec. Take a look at this chart today where, you have this morning sell-off and look at the S&Ps, right? So here's the actual general, here's the market. So, the market actually, for the better part of the day, rallied and closed at or near the higher end of the range. So not everything is A equals B equals C, and you can't trade that way. In great bull markets or great bear markets, you're going to see a lot more of that. In trending environments, when the market is trending higher or the market's trending lower, you're going to be able to trade those trending markets with that basic premise a lot easier than you are, right now.
Now, is there anything that you would add to that, Mike?
Yeah, I just want to say that part of my experience over my career and something that I'm really good at is stock picking and game planning. And you could have a ton of stocks that have earnings, a ton of stocks that have bull flags and bear flags intraday. But why does this one work? Why does this one doesn't? And that's a huge thing. Every morning I will game plan with my group and my team, and I will give you my expertise of why I think this is going to work. You should always have a plan. Tomorrow, if you're trading, LinkedIn and Facebook. We all know that Facebook had earnings this afternoon. LinkedIn is going to be a stock that I have to have on my radar. I didn't touch it today, okay? But I know tomorrow it should be in play. It gives me that catalyst. That's huge for a trader. There's thousands of stocks. You don't have to trade Apple every day. You don't have to trade, Baidu every day. Today, ExxonMobil was a great trade. LVS was a great trade. I haven't traded those names in months.
I would say, just to add to that, if I could, Mike's style is very much, and him and I have spent a lot of time talking about this, really based on, pure objectivity. His approach is, You know, he doesn't necessarily care about the symbol he's trading. He's not concerned with the bigger picture. He's concerned with what's happening in the near term. And as a momentum trader, that's really what he cares about. So I think the best way to describe it is, you know, every day he approaches it just like getting in a taxi. You know, you don't care what taxi you get in. You just want to get in and you want to get out. You have a starting point and an ending point. So he's very flexible with what he trades and how he trades it. Would you say that's an accurate?
Yeah,
sort of
no,
assessment?
absolutely. I mean, if the taxi's too hot, tell them to stop and, you know, get out as quickly as you can. But
Settle down.
All right, and on a different note, here's one from Unique Apple asking if you think we're setting up for another 10 to 15% correction on the SPX after mid-August.
all right, I'll answer that very quickly. I have no opinion and no clue. You know, honestly, the charts really don't tell me much right now. If you really think about, this is how I look at my market. I don't really look at the technicals per se in the macro world. I just listen to the headlines. There's so much negative news out there, so much going on in Europe and this and that. What are we, 300 points off the 52-week high? To me, that shows me relative strength. The diamonds, you know, you look at the Dow component, it's hanging in there. It's not that weak. They're sitting up very close. We're 3%, 4% less off highs. So my opinion of the market, I don't really care if it goes up or down. As long as I have stocks to trade, I'm happy, I'm making money, and I'm enjoying my life.
That's very important.
That is pure trader talk. He really is. You know, he's not. I think a lot of people, and you know, from my experience, and I've worked with a lot of, you know, the retail trading community that, you know, sitting at home trading, worrying about their you know, people spend so much time worrying about, is the market going to go up, is the market going to go up, or is the market going to go down, that people don't. What they should be worrying about, I think what Mike's trying to say is, how do I make money? Ask yourself the question, you know, how can I make money today, tomorrow, versus, you know, I hope this market goes up, or what do I think about the market, or, you know, talking about Europe. It doesn't really matter, you know, if you're going to be a trader, whether you're a momentum trader, you know, an active trader, somebody who's in the short-term arena, you know, your question really has to be, you know, how can I make money? Not will the market go up or will the market go down, because, you know, for every one person that says we're going to go up, there's going to be two people that say we go down, and vice versa. So it's not an argument or a conversation we're spending a lot of time with.
Market Picker asks, how do you trade stocks that have conflicting stories on different time frames? Do you simply not trade it?
Yeah, I mean, you know, Evan and I always say cash is a position. One of the best things about momentum trading, how I trade, I'm not taking overnight. So the macro news throughout the night, I sleep like a baby. It doesn't bother me, okay? It doesn't bother me. I'm not worried if the futures are up and down, if you know, whoever speaks something, we're up, we're down. It doesn't matter to me, okay? But critical for every trader is discipline and patience. So if you love bear flags, okay, and if you just wait for your perfect bear flag setup in a stock that has earnings, maybe a catalyst, maybe something to spark it, 52-week low, if you're patient, you should consistently make a profitable trade. It's about executing good positions. A big problem with traders is they feel like they're forced to trade. Look at this pattern, it looks great. I want to get into it. Force yourself not to get into it and force yourself to get into the best trade, and you'll, you know, be happy with your trading style.
Well, Big Ponzi's back with a question for you, Mike. He asks, what's the key to your consistency?
Big Ponzi's active here. What is my key to consistency? Booking profitable trades. I'm consistently taking profit off trades when I'm in the money, okay? So I very rarely let a winning trade into a loser. I'm okay. If I'm wrong, I'm out. If I'm right, I stay with my trade and I don't get married to stocks. I'm very flexible in my stock picking. I'm coming in with a plan every morning. And to me, I don't get paid by the hour, okay? I always say this. I get paid to make good trades. The stock market might be open from 9:30 to 4, but if I hit my goal and make some good money by 10:15, I'll see. I'm going to a movie.
Dwayne asks, Zynga at $3. Is this a good buy for a long-term play, 5 to 10 years?
I think if you buy Zynga at 3, you're risking $3. That's my opinion on Zynga. There's no catalyst technically. It's completely bearish on the charts. You know, they're not making money. They're forcing that stock down, and a $3 stock is a better chance of going to $2 than $5, in my opinion. So long term, understand your risk, no matter if it's a long-term position or a short-term. That's my advice. Look, I have personal, stocks and funds that I consistently put money into. I'm looking for a long-term trade in a macro, style that way. But when it comes to trading, this is my cash flow account. Zynga is something I won't pull up until the stock goes above 5.
All right, solid advice, guys. Thanks for joining us. Anything to add? We got to take a quick commercial break.
I want to add that we are relaunching Mike's Momentum course. It's Momentum 2.0. We are very, very excited. I know Mike and Steve and a lot of the other Momentum traders here at T3 Live have spent a massive amount of time collecting, racking their brains, putting together all the things they know about what they do professionally in terms of risk, rules, strategy, setups, disciplines, everything that they do on a day in and day out basis that have made them successful over, how long have you been doing this?
Over 12 years. And, I really want to, before Evan finishes, I'm a trader first, okay? I love trading. I'm trading every day. I'm here at 8 o'clock every morning looking at stocks, and then I'm going to mentor. I love teaching. So you have a trader who's trading. I understand the markets. I'm picking stocks every day, and I'm going to help you guys get where you want to be.
So what we're going to do here, because we love the StockTwits community, and you've been so good to us, and I say that every week because the interaction that I have with a lot of you, is consistent. It's high level. It's very, very smart. And I think that we're going to offer something that maybe some of you, especially if you're day trading, and this, the things that Mike say hit a bell with you or they hit home, they make a lot of sense. Go to T3 Live, and I'll pull it up here on the site. If you click on the Momentum Trader course, which is here's T3 Live over here on the left. You'll see that we're offering a huge discount because this is a brand new curriculum. The Momentum course, which is Mike's course taught by Mike and Steve LeVay, two of the best in the business. Their course and 1 month of mentoring, and we're only doing it for 100 people. So it's limited to 100 spots because we just can't service anything more than that right now. And if you click here, enroll, you'll see the discount and the class and the mentoring. And that's all you need to do. So it's an $897 price. It's a huge, huge discount. It's about 70% off. And we are relaunching Momentum 2.0. And Mike and I and a lot of other people here at T3 Live have spent just a ton of time, poured our blood, sweat, and tears into this class. And I really think that for those of you that are momentum traders or interested in learning more about the momentum approach, there's no better place to learn from somebody that does it day in and day out, consistently, high level, professionally, with strategies and risks and rules and all that stuff. So that's our gift to you today.
Nice gift.
Thank you very much.
All right, guys. We're going to take a quick commercial break. We'll be back with Red Dog in just a few. Keep the questions coming. Be right back.
Hello, everybody. My name is Pete Renzulli. I'm really, really excited about introducing you to and inviting you to T3 Live Active Trader Summit. Network and associate with other like-minded people who have a burning desire to learn how to be a trader. Learn how to be a better trader than you are now. There's going to be a ton of great content, strategies, tactics, techniques. Learn to take your trading bigger. Please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back answering your questions live. I'm back here with Red Dog. Glad to have you back, buddy.
It's hard to come back after Mike Lee's been out here with Evan. These guys,
they're good.
They light up a room.
I know. But let's just jump right back into it and talk about your favorite, LVS. Abila Shreddy, that's my best shot, asks if you could talk about LVS, what levels we should be watching for, and when we should get back long.
By the way, we need to clarify that as a trader, we have favorite stocks and we have go-to stocks when they're acting well. And for the past year or two, a lot of our traders were all over the casinos because they acted well. They were making higher highs, there were great chart patterns, they were above all the moving averages. And then once it topped out a few months ago, it actually changed complexion, and we haven't really talked about it I think we took it off even the price point sheet for a while. It had a reversal top. It broke the, an uptrend. And, we would try it from time to time, but LVS did not become our focus because it changed its character. There were different stocks got rotated in and rotated out. If you look at the chart of LVS, you will see the reason why we loved it way back when is because you had a really nice pattern here. If you remember, we talked about this channel. You had a nice channel going sideways. We were looking for a breakout. It actually consolidated another move that we played way back when. So you had a beautiful run. Okay, then it needed time to consolidate, then had another move. Okay, so that is why LVS was part of our go-to list, and so is Wynn, and so is some of the others. Now you fast forward to this look at this little bar right here. You know what that means? Everyone knows in my affectionate land of Red Dog, this is a Red Dog reversal. Let's take a closer look. That's when, you've had a huge move, and then you have a reversal bar. This wasn't that extreme, but we pointed it out when it tried to make a new high, closed below it, came back in the base, and then what you had to do is take notice. We called these things days to take notice. And then when it broke this wedge type pattern up here, it started to act very faulty. This was your way out of LVS way back when, around 56. That's when it changed. It also started to go below the moving averages. So the question is, can you get back in now? Has things changed? Well, today, I probably took more LVS than I've had in a while. Okay, from 60, whatever this is, 62, all the way down to through the lows, into the earnings, and the earnings were bad. Believe me, the earnings weren't great. They missed, but I was thinking beforehand it could be priced in. So now, after the fact, you see this huge volume. To me, this looks like a little bit of capitulation volume. So to me, I'm going to give this a chance. It's in my swing account. You'll see it there. And my strategy is this, if you want to follow me. Okay, I am long, and I'm going to stay long unless it breaks this low here. So for those of you professionals out there who says, I don't day trade all the time, I want some swing trades, we're going to also have a swing trade class for you. This, to me, is a candidate for a swim trade. Now, I'm going to go swimming after for the Ironman in practice, but for a swing trade. And here it is. Here's the volume. Big move on news. I think, first move up could be to fill the gap and probably get to here. So it might take a little bit of time, but that would be, I would say resistance 1 where you could sell some. And then you have, this downtrend that probably comes in closer to 40. So I think the easy move, let's hope it's easy, could take you back to this area. Your stop will be the low of the day. This will be on my VTF. I'm going to tell compliance right now, 34.72 is my out. But I will also trade different size based on what goes on. Because if it opens just say down a little bit tomorrow, I will be a buyer through today's high, which is 36.58 for that continuation. Hopefully that pattern works out.
Now, what about your strategy with a stock like Lulu? What are the key levels that you're watching there?
Lulu is also a laggard type stock, a former leader. It's got battered and bruised, and a lot of guys made a lot more money shorting that stock recently. But just like some of these lower tier plays or these laggard stocks, I hate to call Lulu a laggard stock because it's only recently, they do have a setup. So if you look here at Lulu, I like the setup here. Okay, you take a look here, just macro-wise, look at this breakout failure. I'm actually long some Lulu right here. That gave you your clues to get out of the way. Then you had this, in earnings. We talk about not taking stock into earnings because things like this happen. Here's your gap down. What did it do? It did not fill the gap. So that can give you clues of more direction to the downside. So with that said, you now have a nice downtrend that Lulu's been following, right? Earnings are out of the way. And you have this flag type pattern here, almost a small, inverted head and shoulders pattern where if this breaks above 59.84, I'm only looking for a trade to maybe retest a 200-day around 62. So right now I think as a laggard type play, you could get a little bit of momentum to the upside. Your stop on this one could be around 57.12. So I think at this point, closed well, at resistance. I think you could add through this, and 62 is not too far out of the question for an objective.
Okay, Moneyball asks, can you try describing how you hedge up and down intraday on a volatile day when there's buying at lows and selling at highs?
Well, it depends on where you stand. If you have, 8 positions and you come in with a spider hedge, and all of a sudden, the spiders are down 10 handles, and you cover some of your spiders and you add to some of your longs. Then when the market rallies back up and maybe goes positive, you then could reshort the spiders because it just, popped up. You can get better prices. Then maybe what you bought in the hole, wound up having a nice move and going positive. Then you sell some. So you're taking off and you're maneuvering. On down moves, you cover your hedge, and then back when you rally back up, you put some more of your hedge on, and hopefully in those down moves, you buy the best stocks that are showing relative strength. So when the market does rally, you create a little alpha for you. But if you're not carrying so many positions, you don't need such a big hedge. You're actually more net short. So coming in today, I really didn't have many positions because I was a bit more neutral to bearish when we closed below that intermediate trend line. I actually have puts on. But I said I'm going to have the puts on just to take the edge off just in case we break down. So this way, if it happens in a way that I don't take the risk on, which is heavy overnight, I'll be in them and my risk is premium paid. And then I could trade intraday. So at this point, with the spiders back in this channel, and some things acting somewhat well, across the board, I feel like it's time to have a few stocks and then put it on some hedges. So, I'm short a little spiders. I have 2 longs, and if things start to continue this way, I'll probably have 4 or 5 positions and continue to tactically trade. At this point, tactically trading has been the way to go because, these headlines could knock your teeth out in both directions lately.
Well, Just Watching here is watching your Twitter account because he saw you tweet that the indices were manipulated today. So he asks if you can explain how and why that happens.
Okay, well, what I meant by that was that today, or yesterday, if you go back to the chart of the spiders, so to speak, you go to this chart of the spiders, you will see that we closed below this intermediate trend line right here. So if you were short the spiders, you really didn't get a way out today. You had a small way out, so you couldn't really, if you were just net short thinking we're going lower, you couldn't get a way out. So because they were buying futures all day long. But if you yesterday, saw stocks closing their lows, come back to me. Just say you saw yesterday Priceline was really weak. CMG was pretty weak. Apple was pretty weak. So if you took some stocks that you thought were technically somewhat broken, Netflix was pretty weak. It didn't really matter that the ECB president came out and said that we're going to make sure the euro survives no matter what, because if those stocks are that weak, it's just a gift that you could short more higher. So if you look at Priceline, so to speak, look how it closed on the prior day. It closed yesterday at the lows. So today it opened up in the bottom third of that range, up $6-7. So if you came in shorted, you're like, oh my goodness, what's going to happen? Let me see if there's any weakness, and I could short some more, and I could cover and work my way out of it. So if you go to the 5-minute chart, you will see that, let's go to today, this price line opened up. You could have shorted it into the prior day resistance, went sideways, went negative, so you had a way out, you traded out of it, you salvaged the trade, or you stayed with what you had, you added more, and then when it broke through the lows, you really made a lot of money. And then you said, okay, I'm out of the way, and then it bounced at the end of the day. But being short a weak stock, even into a gap up, you were able to trade out of it. Same thing happened. Amazon actually went, -2 today, but then you look at CMG, this too, look, gapped up. And then if you were shorted because it's been a weak stock, it's a broken high beta name for now, you could have shorted it, came in, filled the gap, and then you could have had a continuation short to the downside where the spiders, if you would just short the indices, came in, but you never had a way out. So the reason why I said that is if you have a short thesis on a stock that's been acting well, or acting short or weak with heavy volume, even if the futures are up, you typically can salvage the trade because the sellers will come back, and it's sometimes just a gift to short more. Even Netflix. A lot of guys went out short Netflix yesterday because the earnings were horrendous. It closed near the dead lows. And with the futures up, it wasn't even up that much. So if you're short a bad stock, it doesn't matter what the market does because Netflix didn't care that the futures are up because it wound up opening down. And look at the continuation to the downside. I think I tweeted right around here saying that Netflix is getting close to that 55, which I said could get some interest. And then it went sideways. But whatever. The moral of the story is, if you pick stocks that are acting weak with heavy volume, you sometimes get an easier way out if they, versus the futures that they could be buying it all day long, and then you have to figure out whether or not you want to roll them up or you just want to revisit at another time.
All right, here's another one asking for your thoughts on Family Dollar stores, FDO.
FDO, I don't really trade this one so often. Let me look at the daily chart. You know, here was, like I said, the last gap up, and then once it filled this gap, a lot of momentum came out of the stock. Usually if you gap up and you can't continue or you fill the gap, it's a little bit of a red flag. Came back into support, came back and retested. You know, it's in major support now. It's above the 200-day. It's not leading the market. It did participate today and have a green day. I guess you can be long small if you really like it. For this thing to get any type of momentum, you know, it's going to have to break this downtrend here. You have some resistance coming in this area also. So, you know, you can watch it. You know, if you like it long term, and you know, you're better off buying the pull-in versus chasing excitement. But I would be trading it and use this as your stop. Use this low of 63.51.
Eleanor Rigby, Red Dog, do you use a level 2 when trading? Why or why not?
I do. Okay, I actually have 2 monitors. I have 6 monitors, but on 2 of them, just because I'm a trained active trader from way back when. I've been doing this for 15 years. I used to always look at the level 2. I like to see the speed of the level 2. I like to see when, you know, when offers get taken and market makers leave. You know, sometimes it could drive you batty because it gives you a false impression. But, you know, on my 6 monitors, I have 2 monitors with one with a 3-minute chart, a 5-minute chart, a 15-minute chart, a daily chart. Then I have a news service, and we have the virtual trade floor. Then I sometimes have Bloomberg TV or whatever. But then on my bottom 2, I have our software package that we use, where I have 6 market makers open, and then another 6. So I'm actually watching 12 stocks with level 2s that I'm used to seeing, so I could see when I want to see it that are toggled to charts. So the level 2 is toggled to a chart. So if I'm looking at Apple, I can see the level 2, but then I could also see every time frame of the chart. So it aligns everything for me, because I'm not trading with news. I'm not looking at analyst recommendations. I'm trading the price action. And if you want to give things a bit more room and you can't handle the gyrations or the speed of level 2, then just put little chart boxes and trade the chart box and do an execution with a point and click. But I'm an old school keyboard guy. I'm not a point and click guy, so I like to have level 2s up.
All right, Osdex says that as of 3:58 p.m. today, he saw 44 new highs and 89 new lows on the NASDAQ. And he asks, do you look at market internals before making trades?
I think about them. You know, I think about when like we gap up and we're up 150 points and the internals are strong, and then as you go out through the course of the day, if the internals weaken, gives me some clues that we could potentially fail. And then if I see some leaders starting acting poorly and doing negative divergence to the futures going higher, it also gives me some clues that we might fail. So I do look at the internals. I don't look at them based on every trade. I usually put the chart I'm watching or the stock I'm watching, I line up the chart, I watch the price action versus the futures, versus the markets, versus other stocks in the group, and then I make my decision based on price points and the composure and speed of what's going on. So not all the time am I looking at the internals, but on extreme days, I do, just to see if there's any clues that we're gonna get some type of reversal. And you know, that's usually when I look at that type of that analytic.
All right. Scott, when a stock tries to perform a red dog reversal, how long do you generally give it intraday to hold above that level and confirm it?
It's more of the close. It happens differently all the time. And typically, you get that reversal either in the first 30 minutes or you get it like around 2:30. Because in the first 30 minutes, sometimes if it's really emotional, you know, and the stock's been battered and bruised, and in the first 30 minutes it gaps down and reverses, you know, that's the most painless, because where it opens flat, trades through the low, goes through, makes that low, comes off it, you know, you buy it as it trades through that low, and then you could just trail it the whole day. Those are great. Those are painless. Sometimes, typically more of a top. Tops are typically made more in the afternoon because they like to squeeze everybody out as far as possible. And then around 2:30, that's when they pull the rug, comes in, trades above the previous high. You short, put a stop in at that high. So this way, you know, you can let it go. But you know, it happens on different time frames. I'd say bottoms usually happen more between, you know, 9:45 and 10:30 on a red dog reversal, and tops typically happen more around 2:30 to 3 o'clock, you know, on a red dog reversal. But it's all different.
Well, speaking of red dog reversals, DJZ asking if you think Weatherford International, WFT, had a red dog reversal today.
Let me take a look. Look at this. Yes, it did. Good job. What was this guy's name?
DJZ. ZSN.
All right, good enough. Well, you look at a stock like this. I'll explain. This will explain this pattern very well. Okay, this WFT was as high as $18, and then it's been slowly getting crushed. Right, crushed all the way to the bottom of a channel. The reason why a red dog reversal sometimes works is because a lot of guys have been probably trying to, trade it and think that this was enough. So you have a nice little channel here. So when it broke below this channel, anyone who said, okay, I'm going to, all right, put my stop here at this low. The low here is 1154, or this low, which is around 1114, whatever it was, because who knows, if it broke it and continued, it could go all the way into the single digits. So you had to have a stop there. And some people who thought it was going to go into single digits probably said to themselves, you know what, it's got to get through here to get this. So they shorted it. So today, it traded below 1151, okay, went as low as 1117. So the strategy is you bought it here, okay, and when it went back above that low at 1151, your stop is now 1117, so you have about 32 cents worth of risk, okay, and if you did it, it closed at 1180, so you automatically made decent money for cash flow. If you're only a day trader, you don't put risk on overnight, you made money. Typically, after a move like this, it relieves some pressure so you could gap up, so the market gaps up, there's your day and a half move, or you say, you know what, this stock just got crushed, I'm going to trail it. I might have a swing trade, and soon we'll be having a swing trade class where you could get involved and create alpha or cash flow to your portfolio, even if you're not a professional trader or one. And then if you go back to the chart, you will see that the first level here is filling the gap, and then who knows, maybe it comes back up and continues. But this, my friends, is a definite red dog reversal for now, as it cleaned out some supply when it got stopped out below, trapped some shorts, and closed okay. So I would say you could trade versus that level.
All right, well, we're just about out of time, so before we say goodbye, is there anything you'd like to share about your strategy heading into tomorrow, last trading day of the week?
I think what you want to do is you want to see if there's commitment to today. The market was up big. Tomorrow, typically, you probably have a digestion day. And after a big up day, typically what you want to see is commitment. You want to see the market hold the top third of the overall range to show you that it wasn't just a flash in the pan. I think the day after big day, you tend to make more money because you can see the relative strength or relative weakness. If the indices are sort of flat and it holds in there, you can see really what's strong, what's weak. And I just think that we're going to be still thrown around by headlines. We still have to worry about what's going to happen in August. Is Bernanke going to do something, or is he going to wait to September? Is there going to be more? Is there going to be something out of Merkel saying, you know what Draghi said is wrong, and then we open up down and it gets more choppy? So I do think you just really have to know your risk, know what you're looking at. If you're not seeing it and you're frustrated, don't take that many positions. Put some green days together, and then you'll start feeling better, and then you can start putting more size on, to make money. If you have short on the brain, because every headline you read is talking about growth slowing around the world, everyone you listen to on TV is trying to scare the hell out of you not to be in the stock market, then maybe stop reading some of the headlines and read more of the price action and the chart patterns. I know for me, I've been trying to do a lot more research to know exactly what's going on everywhere, and it's been throwing me off a little bit because I typically like to be bullish. I like to trade with a lot of positions. I like playing breakouts. Obviously, we don't have a lot of them now, but I've had more of a bearish theme or tone, even though the chart that we've been following has been somewhat constructive and there's been some good trades. So I would say at this point, the last day of the month could have a bid, or there could be some forces of will trying to make sure that stocks close well. But then you also get some new money in the beginning of the month that could be put to work. So the next few days could have a bit more buying, and then we'll have to see what happens, coming into, what Big Ben might do or might not do. And then obviously more headlines going on with what's going on up in Europe.
All right, thanks Scott, Evan, and Mike for all of the great advice today. Thank you guys for all the great questions. Meet us right here next week. Have a great night.